You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
I want to build a company that people want to emulate. I want to build a company that grows and is prosperous, like our name. And if that means acquiring others and running those companies better, that's good. We don't need to be for sale. We need to build the bottom line. We need to see stock appreciation based on our performance and how we operate.
Welcome back to Mining Stock Education. I'm your host, Bill Powers, getting an update today from Prospera Energy, one of the companies I'm invested in. Joining me, it's a packed house today on today's call. The first is Samuel David. He's the president and CEO. Also, David Richardson, investor, philanthropist, and a big investor in Prospera Energy and advisor to Prospera Energy. Also, Peter Lacey, who owns about 10% of Prospera and is a very supportive shareholder, as well as Angela Vande, an engineering specialist that's working with the company. Everybody, welcome on to the show. And Samuel, you have an improved liability ratio. Could you review this? What did you accomplish here over the past year, and what does this mean for the company, please?
Certainly. The Ministry of Energy Resources has a regulation that all companies, all energy companies must maintain a licensed liability ratio of 1. What it means is asset value should be equal to liability value. When we started our restructuring in Prospera, the company was in a liability ratio of about 0.37, meaning the liability was $9 million higher than the asset value. Over the course of the last year and a half, with our focus in optimizing production while reducing our environmental footprint, Prospera has abandoned over 60 locations, 60 surface locations, and it's in the process of reclamation and remediation process where Angela Vande and Dave Richardson are getting involved in making this company a green energy that pays attention to environment and the local community as well. So while we abandoned this 60 plus location and addressed over 400 non-compliances, and optimizing production resulted in the asset value elevate itself over $12 million to a ratio of 1.21 with a cushion asset value of nearly $4 million. The deposits we have provided is being returned to us back nearly $1 million.
And this allows you to make more acquisitions as well, doesn't it?
It does. We can make actually the acquisitions in process that'll expand the core area, and we can accept liability that has a lot of potential, a lot of reserves that are shutting, and that's in process as well.
Angela, could you talk about your work with Prospera and how you've been working with Samuel to accomplish this?
Yeah, so we have a great team here at Prospera. We're focused on creating a profit. Obviously, that's why you're in business. But we're also doing it with an environmental conscious impact. So what that means is we want to make money and we want to produce oil. Business needs oil. But we want to do it with an environmental focus, which means we have to function as a strong team and be even smarter, use technology and use experience to make that profit while protecting the environment. When I say protecting the environment, I mean doing things right, doing things greener, looking at sustainability, and being a company where we're proud of what we do.
And can you talk about the specifics of how you treat the oil there at site rather than hauling it off too as well?
Okay, so yeah, a little bit of semantics difference, but can I give a little bit of background? Would you like to hear a little bit
please.
of a story? So I'll share this story because it's kind of neat and I find it interesting and relevant. So at Prospera, as we sit today, we have 38 wells that are phase 1 ready. So what phase 1 abandonment remediation means is 38 of these wells that Prospera didn't drill, didn't contaminate, didn't have any production from, we're abandoning them to do something good for the environment and also to show our company is credible. These 38 phase 1 wells have already been abandoned. So that means properly isolating groundwater, downhole, making sure the cement has integrity, making sure there's going to be no further contamination, cutting off its surface, capping, which means if a farmer wants to farm on top of an old well location, there's not an issue with that. And that means phase one ready. So phase one ready means that we're going to go out, we're going to look at as far back as when the well was drilled, where were the drilling cuttings put? Is there anything that's keeping vegetation from growing, hurting the environment? So we do a full scan and we obey all of the government guidelines to do this, and we have those ready. So what that story showing is yes, we're going to remediate, and we're doing it prudently. We're doing it with our thinking caps on, meaning getting the most bang for the money we're spending, because we are spending money to remediate these, and we haven't gotten any production. So we have to be very good at our jobs. And when we remediate, I think this gets to the question you were asking, we're going to do an in situ remediation, which is different, slightly different than sometimes the older common practices. It keeps sustainability in mind. So in situ means remediating in place. And I think I just referenced some of the technology and having to be a little bit on our game. When you remediate in place, you need a treatment that takes the oil contamination, if there is any, or produced water contamination, if there is any, and returns it to a native soil state. So using that excellent technology, and smarter people than me have thought of it, and we're very grateful to have this at our fingertips, for a fraction of the cost, for a fraction of the emissions. We don't have trucks running through people's fields or backyards, and we just spray on. So it's about 90% less trucking, and we just spray on our treatment. It soaks in and it does its magic, its chemistry magic that way.
Dave, you're a philanthropist and you're also an investor. And I know from speaking to you previously that you like to help the earth and you like to help people. So talk about your role as an advisor and why you invested in Prospera, please.
Well, Bill, the principal reason is that I believe it's possible to be environmentally friendly and sustainable while producing oil. There's a lot of material written lately about the challenges of having alternative energy sources. We know that, for example, you can't count on wind 24 hours a day or even for a week. Solar is something which is, again, intermittent. It's great when it works, but you end up with surges through the electrical system, which are hard to manage. There are things like biodigesters, which I'm very involved with, which can produce gas that can then result in energy on a predictable basis. But it's going to be a long time before everybody that's driving oil-powered or gasoline-powered vehicles trades them in. We're going to need that energy just to move the crops, to move people, to provide energy. I'm very, very personally focused on the green space. For example, I'm a director and early investor in Green Power Bus. We believe in electric transportation. I'm delighted to see that everything from aviation to other methods of transportation are going to electric. But it's completely naive to think that we can just turn off the taps of the oil production and still function as a country or as a world. So my focus is really working with Sam and his team to make sure that we are doing absolutely best practices, that we care about the environment. And that's going to be training of the team to make sure that everybody we have on board is respectful of the environment, that we're doing everything we can, and that may include carrying methane monitors around when anybody's visiting a well site, regularly confirming that there's no leakage. And if there is, fix it. Fix it fast. We don't want to be polluting the environment. We want to recognize that oil is a critical energy source at this point in time, and we want best practices in everything we do. And when I got to know Sam, he embraced that concept. And that's what gave me the encouragement to get involved and to help bring my years of activity in the green space and experience to bear with Prospera. I want us to be the poster child of good, clean, and environmentally friendly operations.
Sam, and everything we're talking about here on the ESG front, this ultimately should translate into a better bottom line for Prospera and a company that's more attractive to potentially someone that would be interested in buying us down the road, maybe.
That is correct. As I mentioned, we have abandoned about 60 locations, and it's a 3-year program to reduce our environmental footprint. And a 3-year program entails 240 wells to abandoned locations. And not only it reduces the environmental footprint, it reduces our fixed operating costs as well going forward. And yes, it does result in a bottom line, increasing our margin. Price is something we cannot control. It fluctuates quite a bit, but we can control operating expenses. And this is one of the, not only it reduces the bottom line and increases margin, it also decreases the asset retirement obligation that we hold in the balance sheet as well. You'll see in the year-end financial statement, you'll see that improvement in the ARO liability, and the shareholder deficiency has improved drastically from the previous years.
And Dave, before you go, you've worked in oil fields before, implementing some of these things, haven't you?
I haven't personally worked in the oil fields before. I have encouraged other companies with great success to introduce proper habitat and practices which are environmentally sustainable. If you look at the background that I've got behind me, much of what we have, if not most of Prospera's wells, are in the middle of or on the side of farmers' fields. We have an obligation as partners with those owners to turn that land back into completely productive cropland. And what we want to do, and I know that both Sam and Angela are 100% on board with this, is in a well location, it's basically bare ground. There's a lot of trucks driving back and forth. It compresses the soil. Topsoil is likely to have blown away after years of operation. And it's not necessarily going to be good land to farm. If we have to bring in compost, if we have to bring in manure, we're going to rehabilitate that soil so that the natural biome and the microbes are there to support good quality crops. We want to turn that soil back into productive farmland. And I've often used the expression that we've spent the last 150 plus years turning soil into dirt by farming practices which were not sustainable. And you now hear a huge amount about regenerative agriculture. We want to be part of that. We want to make sure that when we turn a well site back over to the landowner, it's quality land. It's going to serve him well, her well, depending on the owner of the farm, and that it's going to be something that we can be proud of. And I think that's something to say about Prospera. We want to be proud of the way we operate. And you mentioned that try and build a company that somebody wants to buy. That's not my focus. I want to build a company that people want to emulate. I want to build a company that grows and is prosperous, like our name. And if that means acquiring others and running those companies better, that's good. We don't need to be for sale. We need to build the bottom line. We need to see stock appreciation based on our performance and how we operate.
Samuel, another one of your cornerstone investors is Peter Lacey, who's on the call with us today. Perhaps introduce Peter to the audience and talk about Peter's involvement in the company, please.
Certainly, and we'll be glad to. Peter Lacey and Lacey family has been one of our principal investor and a prompt supporter for Prospera Energy. And Prospera success could not have been whatever success we have attained to this point, and our goals and objective cannot be achieved without Peter Lacey's support.
Peter, can you talk about why you invested in Prospera, how the company has used your money thus far? I believe it was around $4 million that you injected into the company for the turnaround story, and how the debenture that was just extended, how does that benefit all shareholders of Prospera?
Well, I think, when I sort of first met Sam and the story, the biggest thing was the amount of reserves that and the number of potential wells and also the horizontal production increases potential and also cleaning up, I do believe that oil companies are, should be responsible for, their environmental responsibilities, and Sam seemed to, relish that as far as, we're on the same side as far as not leaving it to the taxpayers. And so it was it seemed to me a good story, lots of potential with those reserves there. It's taken a bit longer than we had originally, anticipated, and it's like all things. It's a project like this is never easy, and so there has been some very good progress, but at the same time, having the company be required to pay out the debenture at this time is the company is still raising capital, still needs capital to execute its development program. And I think the thing is that because of sort of my different accounts, retirement accounts and stuff like that, I can't own more than 10% of the company. I have to stay under 10%. So whereas with the debentures, that allows me to do that. And so I think the thing is that I'm happy with the progress that's being made. It's just going to take a little bit longer, and that's why we've agreed to extend the debentures, not put a cash responsibility on the company at this point in time, and hopefully that we do see some capital appreciation on the stock in the meantime. So that's really the why I think it's good for the shareholders that that friendly debt is sort of in place and extended for allow the sort of any capital that's getting raised and through the exercise of warrants and everything to be used for the development rather than paying out the debt.
Sam, anything further you'd like to elaborate on that?
Oh, yes, it certainly helps Prospera's responsibility to the environment, because a lot of the abandonment and reclamation that we have done so far does not add barrels. Well, however, it does help to reduce our environmental footprint, and it does require a healthy amount of capital to conduct that process, to complete that process. So it certainly helps. And as I mentioned, the Lacey family has been very supportive on the growth and the responsibilities of Prospera.
Sam, on the acquisition and growing production front, can you provide an update for investors here, please?
Sure. First of all, we're moving into our second phase of our development plan. That is the horizontal well program to capture the significant reserves. At the same time, we're going to expand our light oil property development with 8 vertical wells and 10 horizontal wells in the summer program in the warmer months. In addition to that, we have since we have increased our liability ratio above 1. Actually to 1.21, and that allows us, it gives us a cushion of accepting liability of acquisition up to $4 million. And that kind of acquisition we have in play that expands our core area in Saskatchewan. We also have additional light oil property that we're pursuing that can add nearly 500 barrels of light oil that diversify our product mix, so we're not so heavy oil dependent. Our objective is to be 40-40 light oil, heavy oil, maybe 10% gas. And we're certainly, our acquisitions that's in play now, that's under contract, it gives us that good product mix.
Excellent. Well, the company again is Prospera Energy. The website is prosperaenergy.com. Ticker symbol in Toronto, PEI. And in the States, you can find it currently under the ticker GXRFF, but that may be changing in the future. Just to be aware of that if you're an American investor. Gentlemen and Angela, thank you for coming on the show and joining me today.
Thanks, Bill.
Thank you.